So a bit of interesting news popped up on my news feed today, and that's related to GameStop stock, which on Monday saw its stock price go through the roof. And compared to where it was at the beginning of the year, this stock has actually increased by 7 to 800%, depending on when you look during the intraday trading on Monday. But for a company like this, that stock price growth is absolutely insane to me. And so I took a look at this a little bit further to understand what caused those spikes, and what I found was actually pretty interesting. And then I also looked at the company a little bit further to see if there's any merit here. Is there any foundational reason why anyone should invest in this company? So that's what I'll be going through in this video, so stay tuned. Hey folks, Richard Walls here, helping you with career development and personal finance. And if those two topics are of any interest to you, I would highly recommend subscribing to my channel down below and hitting the notification bell so you get notified of when I post new content. And of course, if you like what you see, be a huge favor to me and the growth of my channel if you hit the like button down below as well. So with that said, let's get to it. So for those of you not too familiar with GameStop, I'll briefly summarize. GameStop is a gaming retailer. They sell new and used games. The most popular titles, they sell game consoles and any accessory really related to gaming. And they've been a mainstay for a number of decades. And as you can imagine, with how much of the world has gone digital, including gaming, the need for a physical retail location, as is the case with many other segments in the industry, the need for physical locations have declined. They've declined over the years. And GameStop, like many others, have had to adjust. They've had to take some of their operations online. And I think as that becomes more the case where they see declining sales, as has been the case with GameStop, the online portion of their business will become that much more critical and would likely be the primary source of their business in the future if they can successfully make that transition. But when we get to the financials, you'll see here what I'm looking at. But that's GameStop's objective at this point in time, and I'll share with you a little bit of what I was looking at and how they describe their go-forward operations and what they're trying to do right now, especially in the environment that we're in, where physical locations are big no-no right now. And hopefully that situation improves. But for now, it's really accelerated the strategy that they've had in place to take their business online. And so I'm going to share a little bit of what I was looking at, and I'll start with the stock price. So we can see where it was, which this is actually year to date, starting with on January 4th. 1725 was the stock price at that point in time, and as of the close of January 25th, up to 76 and change. Now, if you look within the day, you saw the stock price go as high as 144, and I think it actually even went higher than that. But nonetheless, you can see that there is a really abnormal spike, and this wasn't due to any earnings report that I saw. There wasn't any material change in the business, and there wasn't any materially significant news coming from GameStop about their operations. So what was it? Quick Google search brought me to this, Reddit. Reddit is likely the reason, one half of the reason why the stock price went up the way that it did. And effectively, what happened was there's a Reddit subreddit for investing. And here it is. Trading chat community Wall Street bets. And I guess there's a good amount of users on that subreddit. Forgot where the number was. 2.2 million members in that particular community. And it looks like they got together and decided they were going to push the stock price up for GameStop. I am not sure what the origins of that were or why that was, except for the fact that this happens to be one of the more shorted stocks in the market, and with good reason, right? There is a very good likelihood that they will not succeed in the long term. Bankruptcy is, in my view, a real possibility for GameStop. So, because it's shorted, if so many of these members in this community were to effectively band together and buy into this stock, you could create enough demand to actually push the stock price up, which for those that are betting against it, short sellers, they're going to take pretty big losses. And in many cases, they have stops to where if the stock price, again, for quick note, short sellers are effectively betting against the company. So they profit in the event that the stock price goes down. And I'll link to a resource that explains short selling in a little bit more detail. I won't cover that here in this video. But they benefit or they profit when the stock price goes down. So because of what happened here with the stock price rocketing up, they had to effectively cover their losses. And so what happens in that case is that more stocks get purchased, thereby driving the stock price up even further. So you've got two things happening. You got a bunch of folks buying the stock price, boosting up the price, or buying the stock and boosting up the price. And then you've got short sellers that had to cover their losses, which in effect ends up meaning that they buy more shares of the stock, pushing it up further. So that is what appears to have happened here, which is crazy to me because usually it's institutional investors, major investment firms or banks that can exert an influence on the price of a stock because of how much they're able to purchase. The fact that a bunch of individual investors, or what we term as retail investors, can have that kind of effect is pretty incredible. I don't think I've seen that before, but that is pretty insane to me. A little bit of stock manipulation going on there, but the fact that that can happen is pretty wild. So that seems to be the reason. There's no fundamental reason why the stock price is where it's at right now. In fact, where it closed at is insane, and I think even after hours trading showed that it was actually going back up a little bit. But there's no good reason that the stock price is where it's at right now. And just to take a quick look at the financials, and I'm looking here on Morningstar, I find it to be a pretty good user interface, and it gives me a little bit of an easier view over multiple years, at least 3 years in this case. But almost every indication, every financial metric that we look at does not look healthy. I'll put it that way. Revenues down year over year sequentially. Operating income down, now negative. Net income also negative. I don't look too much at EPS, and then assets, that's also going down. However, part of their business transformation is winding down their inventory. So that's an asset that they're reducing quite a bit. And right now I think they're in a fairly okay cash position because they've made so many cuts. But again, that's going down. Liabilities are not going down quite as fast. And a lot of that has to do, and what's common right now, especially with what happened last year, is more loans. So in order to cover, or at least right size themselves from a cash perspective, more loans seem to be the way to go. And in some case, there was actually an instance where they took one of their loans that was about to mature in 2021 and had that extended. I've forgotten exactly what the arrangement was, but they had that extended to 23, or they reoriented that contract to go out a little bit further. But nonetheless, you have that going on. You have debt. That, again, that's, I guess, actually more part of what I was just mentioning. And operating cash flow. So this is, cash is king, especially in this environment right now. And they're not getting it. They're not getting it from operations. They're running in the negative here. And then from financing, of course, I would imagine some of what they're, I don't know if they're taking out new loans or what kind of terms that these new loans are involved, but I can't imagine they'd be that good, because this to me is a really fairly risky investment for a bank. So you've got challenges across the board. Again, starting with just the business operations, declining sales, right? And that does not seem to be reversing. Now, when you look at the third quarter quarterly report, actually, and I don't think this one had an accompanying financial statement, so I'm just reading off of the PR here. Their go-forward strategy, right now they're trying to optimize, of course. They're trying to reduce inefficiencies. They're trying to reduce costs. They're trying to reduce the amount of retail space that they have to lease. And they're trying to wind down their inventory so they're not carrying as much, because ultimately what needs to happen for this business is for them to accelerate their e-commerce, which they mention here, build a frictionless digital ecosystem to position GameStop as a digital-first omni-channel retailer. Now, and you see, of course, large increases in their e-commerce sales, which I can't say is probably saying much, because if you're coming from a low base, if you're just getting caught up to the digital download game, then you're a little bit behind the ball, which I imagine to be the case here. And the challenge for GameStop is there are many ways to download games. And all these game studios, Blizzard, for example, you download directly from Blizzard. And the other gaming studios are escaping right now, but if you buy a PlayStation or an Xbox, you can download these games directly. At this point in time, I don't see much of a value add here for GameStop, because of course, if they're reselling some of these titles, then they're of course taking a little bit of the cut from that. It's difficult to find any value add here, apart from the fact that they can sell used games, which is sort of unique because you can't necessarily there's no digital resale of used games, but certainly not that I've seen. So this is sort of a unique market for them. And again, that's more on the physical copies of these games. But again, that's not where the future is going. And from what I see, there's way too much competition for them to effectively compete long term. They have a few other notes in here about what else they're doing to drive value in the market. I think collectibles is one part of that, but again, nothing in here suggests to me that there's a good long-term viable strategy. Or I shouldn't say the strategy is it's a tough market to be in. So I think given where they've been and what their business has been historically, it's going to be tough any way you look at it. So either they move to e-commerce and they do so successfully, but then they have to really communicate their value proposition to the market and what kind of value they're adding, which I'm not sure I see here. So again, a lot of question marks for me. The financial support that this company is in decline, and at least from their press release, they indicate that they have enough cash on hand, which certainly seems to be the case to last them throughout the rest of 2021 and into the foreseeable future, except that's a little bit open-ended to me. So a lot of challenges ahead. Going back to the stock price, there's nothing here fundamentally happening with the company to suggest that there's suddenly so much more value that popped up. This is pure, as far as I can see, market manipulation. There's no value here. So if you're thinking of investing in this company, certainly now is not the best time because it's wildly overvalued. if you wanted to take a huge risk, perhaps once this craters down, and again, even during the intraday trading, it went as high as 144, I think maybe even a little bit higher than that. And of course, it came down to where we're at right now in the 70s, which is still way, way high. If you wanted to go this route and you wanted to, I would consider this a bit of a gamble. If you wanted to, wait for the stock price to come down to where it was at the beginning of the year. And even then, 17 bucks, that's still quite a bit high in my view. Here's where I see the stock should be. Towards the end of last year, it was in the 4s. As you can see there, if that's scrolling properly. That's where it should be. And I would also guess that the stock price is seeing a little bit of a resurgence due to, I need to confirm this, PlayStation and Xbox sales. So console sales, I think there's a renewed interest, at least temporarily. This is to me, a temporary phenomenon that may continue for a little bit longer, but at the end of the day, there's no real long-term value that I'm seeing here, which is why, I'm certainly not interested in this stock, but you can do your own due diligence and make your own decisions when it comes to financial investments. Of course, if you have any doubts, do consult a financial professional on these matters. That's what we're looking at. I hope this helps. Let me know in the comments below what you think of this stock, and you tell me, have you ever seen anything like this where a subreddit and a large community of retail investors band together to drive the stock price up or even down? I could see that happening as well. Or driving the stock price up. Have you ever seen that happen? Let me know. Or if you're part of this subreddit, I would be curious to understand your experience. Is there usually good information there? I'm not too involved there. But again, this is just a really fascinating episode. I'm gonna guess this stock price comes back down to earth in the next few days. I'd be surprised if it didn't. But I guess we'll check back in a little while to see if what I'm thinking is correct. But again, hope this helps. Hope you found it enjoyable. Thank you for watching, and I'll see you around.